Hey YouTube, this is Zach with Achilles Financial, and today we're going to be talking about Uber, which trades on the New York Stock Exchange under the ticker symbol UBER, also known as just Uber. The reason why we're covering Uber today is because this week on Wednesday after hours, they were expected to announce earnings. That is going to be August 4th. The expectation there is that they are going to post a loss of right at 54 cents a share on a loss of $907.2 million. The expectation is that's actually a huge improvement over the $1.8 billion loss that they had last year. The reason why I highlight that is because this is a company which, since it has been through inception, it has continuously lost money to the tune of billions of dollars. And that in and of itself leads me to be skeptical of what our expectation is going to be for the company over this coming earnings period. They have a lot of downward pressure in terms of the pricing pressure against the company, and overall I find that to be somewhat concerning. You can see that the revenue is obviously they struggled in 2019, or rather in 2020, following a strong growth year in 2019, and right now I think that they have a lot of headwinds that they're going to have to go through to be able to maintain or achieve their stated goal of profitability. You can see some of that net income here on the right hand side of your screen, how they have continued to struggle to post a profit. The expectation is they are looking to post a profit next year though, and that hope is well founded, although it is not going to be easy. So the company overall continues to struggle in their ride sharing business, although they are seeing pickups in the total growth of the segment. The concern there is that they're having trouble finding drivers during this point in time, which means to incentivize new drivers, they've had to pay more, which has led to people having a higher bill, but it has not been beneficial for the stockholders and the shareholders who are actively seeking profitability coming from this company. So for that reason, you just need to be aware that if the company isn't making money, that is less money that is going to be going to the shareholders. And again, you can see that this is not a new problem. It's just one that COVID definitely emphasized. So some of the states that are talking about a Prop 22 type of situation, which California was evaluating last year, which makes gig workers full-time employees that are capable of receiving benefits, is something that Uber is going to be concerned about if that passes in places like Massachusetts as well as New York. And again, they've already had a lot of those conversations in California. So the question here is, are they going to be able to cut down on some of these cost expenditures? You can see here, 2019, just labor total was nearly, or a huge chunk of the overall profit in general, nearly 10% of the total. 2020, we saw a huge decrease in that, but that unfortunately came with a huge increase, or decrease rather, in total revenue, as well as a huge increase in the net losses associated with the company. You can see this all the way down here, losing nearly $6.7 billion over the course of the year. So that is not to say there are not certain capabilities for the company going forward. Some of the things that are good for the company as we look at their growth over the past year is the fact that the expectation is that with vaccinations and with the lowering concerns associated with COVID, although there is the Delta variant going on right now, the expectation is that ride hailing is going to continue to be a powerful part of the company and the overall profit strategy going forward. Some of the downward pricing pressures that we've seen over the course of the past few weeks have been their equity stake in Chinese-held Didi, which is basically the Uber of China, and how the pricing pressure has been affecting Uber's due to that equity stake, as we've seen a lot of emphasis from Chinese regulatory agencies requiring more regulation on some of those sectors and on some of those financial firms. You've seen that affect the stock here as well. So there could be potential uplift, although we haven't quite seen that as of yet. However, they being Uber, has also made some strong partnerships with Costco's and Albertsons, which are two larger grocery stores that the company should be able to make sure that they emphasize that partnership, and that will hopefully drive a further part of their business that they'll be able to utilize. As of right now, though, that's strictly partnership in name only, and we're not actually seeing the effects of that on the balance sheet. So if they can get more business in the grocery line, if they can get more business in the Uber Eats segment, then get both of those business lines profitable. That combined with the potential for full-scale profitability on ride-hailing services means that across the board they could be a fine running machine. The expectation here is that actually going to happen on the company timeline, or will it take farther and more time? If you look at the overall balance sheet for the company, just based on what they have in cash right now, you're seeing quite a bit. So the equity position, or rather the cash position, is very strong, even if they do continue to lose money. They unfortunately diluted last year, so that is where some of this strong cash balance came from. They still, however, need to make a much stronger push for sooner profitability. Otherwise, I think they're going to continue to lose shareholder confidence because they've never made a profit. All in all, though, for earnings, me personally, I'm not going to be playing this, despite the fact that they have moved pretty substantially on earnings the past 3 earnings. It could go either way. I think that they can drop back down to these levels down here of the 34 to 35. I also think that they could pop back up to about $50 to $52 a share, which they were at as soon as about a week or a month ago. So all that being said, I'm not looking to play the earnings. It's definitely one that I'll watch, but there's just too much going on with the company. There's too many downward pushes, and I think that while there is opportunity for a short-term bounce, right now in the short term, I don't see a lot of strong catalysts for the company. However, that could change based off of news coming out of the earnings report. So right now, this is one that I'm just going to continue to watch and will evaluate as it continues to move forward. If you have any comments or questions, feel free to drop those in the comment section down below. And if you think that this video was helpful, please leave a like and subscribe. Thanks. Talk to you later.